The best way to use moving averages when trading is to keep it simple. So I want to show you a very easy way to manage a trade and or gauge, the possible direction of what a trade might take. So starting off right here, I want to show you, we're looking at a 15-minute chart, and this blue line here, this is a 130 period. 130 candles on a 15-minute time frame will divide into 5 days perfectly. So essentially, this blue line is a 5-day moving average using the 15-minute chart time frame. Gives it a much more smoothed out appearance. Now what we also have coming down from above is a 10 SMA, so it's 10 15-minute candles, if you will, and I use that to gauge momentum. But what we've got here, and this is why I turned the camera on, because it's a teachable moment, we've got a pinch. We have a cornering, if you will, of the price action being painted into a corner using the low end here of the 5-day moving average. I think we can all agree that there's 5 or 6 examples of support there. So the algorithms and the quants that are running this particular stock, which is Digital World Acquisition, keeps finding support at the 5-day moving average. However, the sellers, they keep pounding down on the 10-period moving average as well. Again, this is all on a 15-minute time frame. So ideally, we might have a resolution here while the camera's on. And what constitutes a resolution in my book? That would be a closing candle. So far we've got no candle that has closed either below or above these two moving averages as they are now corresponding and intersecting. So what does this tell us? This tells us we can likely predict the coming short-term direction of this particular stock based on the first closing candle above or below these two averages, which are, in a sense, pinching the price. So we've got a little while here before this candle closes. I think what I'm going to do is I'm going to pause the video, and we will come back in the closing period of this candle and see if it gives us a direction, an indication, or a signal candle, if you will, as to what direction this stock might want to continue, either down with a closing candle below, or maybe back up and use that support and springboard back into play off of that 5-day moving average. So let's go on pause and see. Okay, we're back with the closing candle, and it's almost like this chart knows it's being observed. Look at this. It is now even sharper in the pinch. There is no closing definition behind the last candle. We're now working on the current candle. Let me even zoom in here for you a little bit so you can see. Now, as I'm speaking, we're working on this new 15-minute candle. I would go ahead and say we are so close here on this pinch. These two lines are almost intersecting. Again, the 10 SMA versus the 5-day on a 15-minute chart. If this candle starts to creep down and create some red, I would probably be inclined to think that it's on its way to breaking down through this support, which is more than likely, considering the 10 period is a faster moving average than the slower 130 period. So there's an interesting way to gauge momentum, to gauge price action, and more often than not, or more importantly, I should say, no matter the situation, it'll help you make the decision to either stay in or get out. And that's really what it comes down to. When you're in any position, managing the trade is where the skill level really comes in, and that comes in through trial and error and simulation, of course. But this is just a very simple method that I like to use, literally using simple moving averages. Now it's green. It's almost like it can't make a decision. Kind of reminds me of my wife. I'll leave you with that.